Good evening. I'm Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for Wednesday, the 17th of May, 2023. What a day. You know, last night I watched the futures. We weren't going anywhere, barely higher in the evening trade. Came in the morning. They tripled their gain. The Dow had been up about 30. It was up about 100 when I woke up at about 3:30 or so in the morning. That's Central Time. And it came alive after President Biden scheduled a news conference. It hadn't been scheduled prior to that, before he was going to board Air Force One and go to the G7 meeting for 4 days and return on Sunday. And his words gave the market the oomph it wanted. He said there will not be a default. He did what I said yesterday. I analyzed that correct. He has taken out of the equation for the time being Schumer and McConnell. They're gone. Let them get away. Too many cooks in the kitchen. He's going to have his staff and McCarthy's staff get together, and they can come and hammer out, if they can, what a deal should look like. And then from there, that can be presented to McConnell and Schumer, explained. And then from there, it goes to Congress, and Congress has to debate it and do whatever. The problem with all this is it's going to be now the 18th of May. That gives you 12 days before you run, or 13 days before you run out of time, according to the June 1st date that Janet Yellen gave us, where the U.S. Can't pay its bills. Now, you don't want to run to that day. Could she extend it a little? I don't know. I don't know the workings of it. I would assume so, but a little's a little. I mean, you don't find all this money out of nowhere, and she's worked, what she says is as much as they can do, and the CBO says the same thing. So I think that now, what do? Well, you already saw that some of the senators came out quickly. One of the evil ones, Senator Warren, that's what I like to call her. I'm not a fan of hers. And we're not going to do this. I wouldn't vote. You could not get my vote for that. Calm down, lady. Why don't you see the whole package before you pick out one thing? Maybe the package has a lot of good in it. But this is what goes on. Remember what I told you. Everybody wants their TV time. That is what Congress in large part is about. It's why things don't get done. They could have been negotiating this from February. But in all fairness to President Biden, every president behind him that's had a debt ceiling, they don't do it the first time it comes at them. They drag their feet. This is how Congress works, not just on debt ceiling, on everything that's got a due date. Nothing gets done well ahead of time. It is one of the problems that's there, and it's for the reasons I've told you. Everybody wants to get their pork. That's what it's called, P-O-R-K. They want to get their pork, their time, whatever they're going to get out of the deal, they want to get it for themselves. Keep that in the back of your mind. Can you get this deal done in roughly 12, 13 days? I have my own doubts. I got my fingers crossed. I would love to see it happen, and then we're just back to dealing with what the Fed's going to do or not do. But I don't believe that they can, just because I believe of the dysfunction that in Congress, and I use the word Congress, not any one house, Congress. And to get all these chambers, two chambers together, and to hark through this bill and to argue it out on the floor and to get the give and take and tell me it could be done in maybe a week, that's about the time you have. It's possible. It's not probable. It's possible. You have to give it that chance. I could also win the lottery tonight. So I think an extension is still on the table. Nobody's mentioning it. Nobody's saying anything about it. And that's because it's the logical thing. And if you say it now, it means you're not going to work towards getting all this done. You do understand that. We can say that. They can't say that. And that's how I'm viewing it. Number two, we're hearing all these different Fed members, ex-Fed members, Clarita. I'm hearing everybody speaking. And to a person, I'm not hearing one of them saying that they see a pivot to the Fed to the downside in 2023. Not one. The only way that will happen is if there's a calamity that happens to the economy. Could the debt ceiling be the calamity? Of course it could be if you went into a stage of default. I don't believe you go there. It's political suicide. And at the end of the day, these guys in Congress that we put there, I'm included in that, they save their own necks. They won't do something that's going to get them in that kind of trouble at home. So I'm still thinking that we get to another unfortunate 30 days or so more of arguing about this. I hope I'm wrong on that. But the Fed part of it, got to see what the CPI and inflation looks like. When we look at ARC, it's just churning right here. Today up with the whole market. In fact, the market took everything basically with it. I mean, if you looked at the bank shares, they were up 20-some-odd% in Alliance, and the markets were coming. Schwab got lifted by it. Everybody's getting a lift out of this market right now. The pattern broke the downtrend in ARC. You made an outside day up. So until today's low is taken up, be it tomorrow, Thursday, or Friday, the odds favor the market's going to try some higher levels. And obviously the first level is right here that it just hit, the 200-day average. Normally, the first challenge of 200-day averages, look at them. They've been failing each time. Can the market prove that it's not going to fail and run? That would be a tip-off of something else going on. I'm not saying that we're there yet. If you are, then after that, it's 39.69. That would be the next resistance. Get under today's low, either on Thursday or Friday, and you have had a total failure on this. I think you'll be back at the 18-day average before you know what's going on. Are you overbought? Oh, yes, you are. So you're in an overbought market that's already up at resistance points, another one right above it. In Schwab has an outside day up too. Important. So until today's low is taken out, I view the market as having the possibility of trying to get back up to the 53.50 area. I started saying to you, and I know I said it here, you watch me, that I think we're putting in a bottom in Schwab. Well, as it turns out, the bottom is now in until today's low is taken out. In the gasoline, well, you lost the embedded reading back a while ago in the futures markets. This follows it. So now you're up into the resistance here. This is the Memorial Day rally. So I'm labeling it that. Could it extend to the upper Bollinger Band? It could. It's already overbought. It's not in a trend per se. It has a lower and low, higher high, but it's being carried by what's going on in the futures, which are now getting into resistance areas. In Tesla, obviously, the market liked what Mr. Musk said. He's not going anywhere as CEO as I see it for a while. I didn't hear anything in that conference that he's giving up what he's doing. He basically told everybody, hey, you don't like what I do? Don't use Twitter. Don't buy my cars. Okay. He's going to advertise. I mentioned that yesterday. So he's becoming more of a car company. He wants volume. He is the one producer in electric vehicles that has the ability to crank out volume. So he wants to get it. If that means taking the price per unit down, he's willing to live with that if the volume makes up the difference and adds to the bottom line. That's his game right now. And then his other game is the subscription service, selling the batteries. I mean, he's so integrated that it's an interesting business. It's a big, big deal. In XLF, this morning I was telling my futures, I said, don't count out XLF. I said, you might see these banks figure out ways here to make some money on all this, because we have to figure out what the Fed is going to do or not to do once we're past the debt ceiling issue. And we're going to know where we're at in this debt ceiling issue, very frankly, probably sometime next week. Why? They can either get it done next week, or they're probably just not going to be able to get it done then, and they'll go to the extension. Then they'll get another 30 days. But guess what? Instantly, that brings the Fed back into focus. What are they going to do? Because they're going to get the end of the month, beginning of the at the beginning of June, the jobs report, and then we get the CPIs right in front of the next Fed meeting. Already I'm hearing that Canada, which held on 2 meetings not raising rates, they went into their pause. The swaps are acting as though they're going to have to go back to raising. If they do, they're just like then Australia. which paused and then had to make their move too. So this inflation is sticky as can be. There's a rent war going on in parts of Chicago. I want to mention this. I was reading a real estate article today. In what we call the Fulton District here, which is the hot area, it's the new hot area. It's where Google and Facebook and everybody's got their offices right now there. That's where McDonald's been for years, but every high-tech company is locating there in a major, major way. And they're building these monster buildings to take people in. Well, they're filling them up as fast as they're ready. That's number one. I mean, they go like hotcakes. And when you hear an apartment's free, people are running for it. And there's a bidding war going on for rents. Now, I'm not talking that these are $10,000 a month apartments. These are 1 and 2 bedroom apartments that are going into the couple of $1,000 range. And let's assume it's $2,500. The guy's coming in, I'll give you $2,700. Give me the lease. Another guy, I'll give you $28,000. And how long this will be, I don't know, but it is a headline in Chicago and going on. Does that sound to you? And we're just one city in America. But does that sound to you like a weak shelter market? I don't think so. In XLI, we have a market that's got higher highs, higher lows, and it's caught in no man's land right now. So we got pulled up in the industrial part of it. I'm not buying that. You saw the Empire State numbers. They were a disaster. We saw the Richmond Fed numbers. They weren't good. I have my doubts fundamentally. Now, where the sweetheart play is in the chips. Everybody wants a chip. You saw that the Steve Cohen came out, said, no, you're going to have a soft landing, and people don't understand how big this chip play is going to be. I hope you know who Steve Cohen is. And the market running to the upside right now, breaking out over the Bollinger Band. You know, you only stay over that 5% of the time, so I'll let the euphoric people want to own it. I wouldn't want to buy it over a Bollinger Band. Doesn't mean I don't want to own it. I don't want to own it over the band for a new entry point. The home builders, you saw what happened today with them. We got a complete flip-flop. The market was expecting that the starts were going to be down 1.4%. They went up 2.2% or so, and the permits, which they thought were going to go up, went down. I don't understand what's going on quite there, but obviously, you know, people want to own things. The problem is right now, if you looked at what mortgage rates are doing as this Fed question and the debt ceiling questions going on, they've been climbing again. If you saw the mortgage index numbers this morning, every part from the headline index to the refi, all down, big percentage. XLE, energy, okay. Is it going to come alive? Well, it's almost a guarantee that it'll go up once Biden said they're buying now. You know, they didn't have to say anything. All they had to do is buy some and say, we bought 3 million barrels. As President Trump said, you don't tell the markets everything. And they're playing their hand wrong. They're being so transparent, they're hurting themselves. In any case, lower highs, lower lows, still embedded. Once you lose that, then I think you're going right back to the 18-day average. Because of what's going on in the future sector, I have my doubts that I want to play that on the short side. Then in the gold market, will you have enough strength to drop? Now, here's what's wrong with the marketplace. You've got the stock market rallying. You've got yields. Every part of the yield curve is taken off this week to the upside in yields. Every part, and the dollar's going up. Something's amiss. Your interest rates are going up, the stock market's going up, and the dollar's going up, and you're going to tell me now they can all keep doing that together while this debt ceiling and then the Fed issue. I say no, they can't. It can do it for a brief period of time. So I'm concerned with it. So I think gold is going to make a statement here at the 180-280 level. I wouldn't be surprised if that we look back and we say, okay, it bottomed out in that level again. I am not saying to buy it. The trend is clearly to the downside. It's not embedded. To negate the current trend, you'd have to get back over 187.88. That's a ways off from here. $3 higher can happen, but all that would do is negate the downtrend. And there is resistance at 186.61, but you're so oversold. I don't see the bears wanting to defend that. In SLV, this is the gorilla glue trade. It's when you latch onto a Bollinger Band and you just drive it lower. And the combination of the higher dollar, higher interest rates is just killing these markets. You could go down to the 100-day average here. There's no reason to think not. Copper got beaten up terribly. Remember I told you what it did in the futures yesterday? Well, today the futures came roaring back, but you didn't do it here. There's a disconnect to these to a certain degree. You're still in a bear trend in the market, a lot of resistance. You're liable to get a bearish crossover where the 18-day average is going to get under the 100. Could happen tomorrow or Friday, so keep your eyes on that. In BND, what do you think I'm telling my clients as you come down to the 100-day, the Bollinger Band, the 200-day average? I think the pros will cover their shorts now. Then we get to the dollar. Would I ever tell a client to buy over a Bollinger Band? Over a Bollinger Band. Not going to happen. Is this a gorilla glue trade? For sure. You're riding every day now, the market on that. You either embed or this correction will not embed. You'll turn down and the market will suddenly give up that gain. So you're at a dangerous area there. And the same thing's happening here. You're getting your gorilla glue trade. I use the word gorilla glue because the market sticks to the Bollinger Band and it can't get away from it. And it'll probably, I think, culminate where the pros are taking their money off between right now. I think they began this whole route down to the 100-day average. We'll see what happens. That is not a reason to go long. It's a reason to come out of shorts. There's a very big difference. So you put it all together. You're coming up with the game plan. Now, this is our website. A lot of you have asked me, you use TradingView and some other parts. We have our own software, obviously, but if you're on a TradingView, I have already put up my suite of all my indicators. Now, let me explain that to you. It's my swing line. It is my version of slow stochastics. It is the outside day. It lights up. You can turn that off if you want, if it's annoying to you, but it shows you all the outside days. And then if you've taken the course, you're going, whoa, look at that's where my stops would be. And here's what I said basis that. Window envelopes will be there. It's everything that I do on my charts, all in there. So you sign up here. We take it the rest of the way. We'll send you an email that, no, you're ready to go. And bingo, you're done. So that is where you end up doing that. If you like my courses, if you go to the word education here, all my courses are there. The free offers that we give, they're all right here. Give it on the free offers. And of course, as we post these updates, they all show up right on our webpage for you. When you join us as a member on the courses, subscriptions, whatever, we have a member login area. You come in there. And if you have a trading account, all your client resources are right up here. It's really a great website. It's simple, easy to get around, and that's what it's about. It's a catalog. All of the trade that is done is in the software products, not on the website, and I like it much better that way. I'm Ira Epstein. Remember, I'm not going to be here on Thursday or Friday. I hope you miss me. I will be back on Monday. I'm cleaning my brain out, walking away for 2 days. Don't even want to look at a market. And then when I come back, I start looking fresh, and you get freshened up very fast, and the trading begins again. You have a great weekend. I'll see you soon Monday. Take care.